Aloha, everyone, and welcome. My name is Jake Simons, Senior Wealth Manager here at the Rice Partnership, based out of the Maui office. Today, we're going to talk a bit about an important role of portfolio construction, alternatives, specifically why we include gold as part of our investment strategy. Joining me today is my colleague Steve Schoenfeld, Senior Wealth Strategist and Portfolio Manager out of our California office. Steve, thanks for being here.
Hi, Jake. Good to see you. Hope all is going well.
Yeah, it's great. Thanks for joining. So I'll dive right into it. Most investors understand the importance of a balanced portfolio. And, when they think of that, they think it's typically a mixture of stocks and bonds. They understand we don't want to have 100% stocks or 100% bonds. We want to mix in that balanced portfolio. But, we talk a bit about alternatives and gold. And so what role do alternatives play as part of a balanced portfolio?
Sure. So alternatives in general are going to help diversify the portfolio. And we like to incorporate some non-correlated assets and gold, bonds, and other alternatives are good investments, non-correlated investments to add into the mix to kind of smooth out some of the performance. You don't want to own investments going all in the same direction, which is great when the markets are up, but when the markets are not, they're going sideways or down, you do want to have that non-correlation involved with some of your holdings.
Okay. So when I bring up alternatives with clients, sometimes I'll hear questions about, isn't gold outdated or shouldn't I just hold more stocks? What is it about gold that we like as opposed to other alternatives?
Sure, good question. So gold actually, if you look at performance, I believe the performance sort of speaks to a lot of what we like about it from a non-correlation standpoint. Over the last year, gold has outperformed the S&P 500. If you look at it over a longer period of time, over the last 5 years, it actually underperformed. Although again, the performance was strong, but it did underperform stocks, which had excellent performance during that period. And then if you go back even longer than that, GLD, the ETF, has been in from its inception around 20 years ago, has actually outperformed the S&P 500 over that time frame. So the performance really points to the non-correlation and why we like to incorporate GLD and other alternatives into most of our portfolios that we have for our clients.
Oh, that's really good. So I know, you mentioned GLD for those that don't know, GLD is also known as the Spider Gold Trust, is a exchange traded fund that holds physical gold and tracks its price. That's the one that we use here at Rice Partnership. But I know there's other gold related ETFs that are in more, gold adjacent businesses or gold mining companies. What is it about GLD specifically that we like as opposed to a different gold related ETF?
Sure. So GLD, like I mentioned earlier, has been in existence for about 20 years. So it's got a strong track record that we can point to, that we can see as far as the trading goes. It's the most well traded in the space. It's the most liquid. Spreads are fairly narrow, and the expenses are not onerous as well. Versus, for instance, physical gold, which I know can be mentioned as an alternative, but there you have additional costs, insurance, storage, things of that nature. Gold miners is another, potential alternative. But if you look at performance, those have been a bit more correlated with stocks in general. So, which is why we look back to GLD being we feel the better non-correlated asset to incorporate in the portfolios.
I'd imagine physical gold also has quite a bit of liquidity issues as well. If you've got gold bars in your safe at home or your safety deposit box, it's a challenge to liquidate those as opposed to GLD is fairly easy.
Absolutely. Yeah, you hit it right on the head.
Awesome. So to kind of summarize our brief conversation, alternatives, especially gold, can play a really big role in portfolio diversification. They help protect against inflation, reduce overall risk, and provide stability when markets are volatile. So GLD kind of allows us to get that exposure in a cost-effective way, and it's a great fit for our investment strategy here at Rice Partnership. So if you have any questions about how we incorporate alternatives into your portfolio, feel free to reach out to us. Thanks again for watching. We'll see you next time.